So the first question is, what is Forex? Forex is basically an acronym of two words, which is foreign and exchange. Put them together, you have foreign exchange, or in short, Forex. Now, what this means is, it means you're exchanging one currency for another. You know what? Let me give you what the Google definition of Forex is. Here's what it says. It says, the foreign exchange, also known as Forex or FX market, is a global marketplace for exchanging national currencies, which basically tallies what I said earlier on. Foreign exchange is basically exchanging one currency for another. For example, if I'm here in Nigeria and I plan to travel to say the United States, it means that I have to exchange my naira for the dollar, because the dollar is the accepted legal tender in the United States. You may be wondering, what is a legal tender? A legal tender is basically a nationally recognized method for exchanging value or for payment. Yeah, let me put it that way. It's a nationally recognized method of paying. For example, in Nigeria, we have naira. Naira is what the government has legalized and also recognizes as a form of payment for goods and services. So in the United States, their own legal tender is the United States dollar. In Canada, we have the Canadian dollar. In the UK, we have the Great British Pound. In other parts of Europe, they use euro. Right, so that is basically what foreign exchange is: exchanging one currency for another. The next question that has to be answered is, what is forex trading and how does it happen? Now, forex trading is basically the act of buying or selling one currency against another for the purpose of making profit. Now, if you scroll further on Google, you'll see questions like, what is forex and how does forex work? And I'm going to open that up so we can see. Forex trading is the process of speculating on currency prices to potentially make a profit. Currencies are traded in pairs, so by exchanging one currency for another, a trader is speculating on whether the currency will rise or fall in value against another. Forex trading can be done in two different ways, which is speculative trading and hedging. The first style of trading that I mentioned earlier on is basically done by individuals like myself and other retail traders out there, and we do this for the sole purpose of profiting from the constant fluctuation in the prices of these currencies globally. The other one is basically done by large corporations, manufacturers, companies, and the likes of them, for the purpose of locking in prices for their overseas manufacturing, sales, business transactions, and all of those things. So they are the one that do the edge form of trading. Right now, for retail traders like myself, what we do is referred to as speculative trading, because what we do is buy and sell currencies as soon as we get an opportunity to do. We do not necessarily hold these currencies physically. We do all that we do virtually on our devices. Now, to put in summary, forex trading is basically buying and selling one currency against another for the sole purpose of profiting.